In the last year, Apple stock is up about 35%, which is a great return considering that the S&P 500 is up about 22%. In this video, I'm gonna provide you with my price prediction for Apple after doing a lot of research on the company and answer the question that a lot of people have of whether they should buy the stock or sell it. When it comes to Apple stock, one of the things that has delivered the most value and likely to continue to deliver a ton of value for the company and for investors, it's the brand and the ecosystem. In fact, a lot of us have been hooked into this ecosystem where, for example, you find that right now is very popular to get like the new iPhone or a new MacBook or the new AirPods or any one of the company's products. And then once you buy into those products, then you're hooked into the ecosystem and the company is able to monetize this in so many different ways. So for example, you have an iPhone, you use the App Store and you buy an app, the company gets a cut of that revenue. You want to store information on your device, you're going to spend money on iCloud. You want to listen to music, the company has music. The company has also Apple TV, Apple Pay, and then next thing you know, you're hooked into all of these services that are very convenient to use. And not only that, but because Apple is so popular, it's almost like for every product that they release, the demand is crazy high, and you see these like lineups all over the world of people that just want to get their hands on the new product. Now, as strong as the company's ecosystem and brand are, there's one thing that really has me concerned about Apple stock. And what that is the slow revenue growth that the company has had in recent years. So as you can see right now, I'm looking at the income statement and you can see the data right here. And here I have calculated the revenue growth in between years. And as you can see in the last year, it's only been up about 2%. In the previous year, it was actually negative. And then here, this was actually pretty good. But then this is not only for the revenue growth, this is also for the net income, which is very concerning to me personally. So for example, as you can see, we had some pretty good improvements right here, 5%, and then we go negative, and then we go negative. So this is not a good sign for the company because at the end of the day, the value of the company is derived from how much income and how much sales the company is able to generate. Now, on top of this, the company also has a pretty decent amount of debt to keep in mind. So as you can see, this is the debt right now, so around 96 billion. Now, this has been reduced over time, which has been good. But when you have debt and declining revenues and declining profits, this is not the sign of a very healthy, high-growing company. Now, before we get into the things that can actually provide a lot of value for the company moving forward, let me just share how I got the financials. So I'm using this add-on called Y-Sheets, and this is an add-on that works on Excel and Google Sheets. You just type the name of the company that you're looking to analyze, select here, and then whether you want annual data like we're doing right now, or you want to look at quarterly data. Click on get data and you're going to get all this information like the income statement, balance sheet, cash flow, key metrics, financial growth metrics, and more. Now, moving forward, what can provide a lot of value for the company is the continuing of launch of products that people really want, because if you launch those products, first of all, they generate a lot of sales, but second of all, they generate the ability for Apple to continue to monetize via their services, as we talked about before. And Apple just recently did a very good thing by just launching the iPhone 16e, which is the most affordable yet highly capable phone that the company has at this particular price range. And you can see some of the features that it has, but it was well received by the market with the stock going up a little bit. And in fact, what analysts are saying is that this launch is expected to increase the revenue growth for the company in the foreseeable future, as well as the net income or the EPS. But what can be even more impactful for the long-term future of the company is the launch of the revolutionary Apple Vision Pro. Now, as it stands right now, I read a ton of reviews on this particular product, and the thing is that people are really liking it. It has really good reviews. Apparently, it offers what seems to be a truly revolutionary experience that works really well well in comparison to some of the other products that are similar in the marketplace. The one downside, of course, is that it's extremely expensive at this particular time. And you can see one of the reviews here from TechCrunch saying that Apple Vision Pro works very well. It's good, but as they talk about it in many different sources, it's actually very unaffordable for most people. But if Apple can provide this product at a reasonable price, it doesn't have to be like way too affordable for people to get, but just reasonable, then this could generate a massive number of sales and continue to expand the Apple ecosystem. Now, as to when this product will be released, nobody really knows for sure because Apple is very secretive about this information, but it is expected to be on September or October in 2025. Now, keep in mind, this could also be further years ahead. This could be 2026, could be up to 2027, according to the analyst. But if this gets released in October 2025, this could be a real powerful growth catalyst for the company if the product is as good as it is right now at an affordable price. The last area of concern for Apple investors is the fact that the company is subject to tariffs. So we know that tariffs are taking place for many different industries, and Apple got really affected by this. So as you can see, Trump's new tariff, it's about 10% on all imports from China, and Apple is extremely reliant on their supply chain to be in China. So therefore, as a result, right now, this is affecting the margins of the company up to 10%, which is quite a big percentage. And the issue is that at this particular moment in time, moving the facilities outside of China or manufacturing in the US is very, very difficult and not feasible right now for the company because there would be other components that would still need to be imported and those would be taxed anyway. So we'll see what Apple does. I mean, at this point, they can either increase the price for the products, which is going to be tough because it could make them a little bit less competitive, or if they just take the cut in profits like they have done for now. The good thing about Apple is that the company has Tim Cook as its CEO, and he's really a master when it comes to supply chain. So that has been really good because moving forward, this will enable the company to be adaptable and a little bit less reliant on its current supply chain and tariffs and other different macroeconomic conditions that can affect the stock price. And also to offset this, and just in general, the company has been really good in doing shareholder buybacks, so increasing the value of the company even further. And you can see here how the number of shares outstanding for the company has been increasingly going down. Now let's talk about the most important part of the video, and that is the price prediction for Apple moving forward and what you should do about this particular company. So as you can see, I have my model right here. It's a super simple model that keeps things very easy and also makes it so that the assumptions behind the model are very transparent. It works by using the Y-Sheets formula from the add-on that I told you about earlier, where you can just use this formula to request the data that you're looking to get. And then once you have this set up, you can simply change the company ticker to whatever you want. In this case, we're going to keep it at Apple. And as you can see, there's two key assumptions for this model. So first we have the revenue growth. In this case, I have 4%. You could also move it higher, except the one thing that's not giving me confidence is the past performance of the company, and also the fact that the company's industry growth rate is about like 7% at the highest. So really for maybe like you can push it to like 5% maximum, but to be conservative, let's keep it at 4%. Now the other number that's important is the terminal price to sales ratio. For this, I looked at the historical numbers of the company, so you can see I'm using this function right here, looking at the price to sales ratio, and it has fluctuated greatly over time. Right now it's about 9, which I think is quite high, especially for a company that has limited growth opportunities at this point. But you can see in the past it was a lot more reasonable. So in my opinion, 6 makes sense. If you look at this number also on a historical basis, you will see the same thing. And if you look at the comparables, you can see that Apple's current price to sales ratio is quite high relative to its revenue growth and EPS growth. So therefore, I think 6 is a good number, but you could even go even more conservative if you wanted and do like a 5. But I don't want to do that in this particular case just because Apple is such a massive company with such a strong brand and ecosystem. So I think that makes sense. And then we have the discount rate, which is 11%, pretty standard for today's interest rates. This gives us a present value per share of the company of around $114 per share. Now, unfortunately, the stock price is trading right now 245, which means we have an upside downside percentage of negative 54%. So personally, I would not recommend investing in this particular company at this particular stock price. Leave it on your watch list, and if the stock price drops, then I think it could potentially be a good buy. Now, however, if you're a long-term investor in Apple and you're like, you know what, like I'm not looking to sell in like 10 years, I do believe that the stock price is likely to increase. Now, we don't know to what degree, and also depends in a lot of different variables and a lot of different factors. So maybe that's the only scenario where I would consider becoming a buyer for Apple stock. But at this current price, I really don't recommend buying into the company. And if you want, I mean, and you've been a shareholder for a while, it could potentially make sense to sell and get at least some of the gains that you've made in the past. But that's really up to you. As always, make sure to do your own research so that way you can make the best decisions for your particular circumstance. If you've enjoyed this video, make sure to subscribe to the channel. Leave a comment below of what you're doing about Apple stock, and I'll see you in the next one.